Hello again, everybody. This is Noah and John, and we are from UrbanDigs, and we are talking Manhattan. And are we in the fifth week here, John, or fourth week?
Fourth week. Well, I
Feels
mean,
like the 10th week.
it's multiple weeks of uncertainty and weirdness, but the fourth week of the entering the fourth week of the no showings, everything on pause order.
Yeah, I'm losing more hair from this whole thing. It feels like it's just giving me a lot of stress.
But you don't have more to lose. So
I got a couple strands back here that I keep for a rainy day.
Right.
Anyway, we got a good one here, though. We got Amir Korangy from The Real Deal here.
Founder and publisher. And Amir is, it's not just New York, it's a nationwide publication now. Congratulations on that.
Thank you. Love it.
That's super cool. So we should be able to grab some good insights about not what's happening just here, but what people are thinking in this industry, coast to coast.
Yeah, he's a smart guy.
People, my editors and reporters know a lot more than I do, and because I just don't read all the stories we put out so much content throughout the day, and everybody assumes I read all of them, and I sign all of them, and I edit all of them. And the fact is, I probably read maybe 10% of them, and but yeah, fair enough.
Yeah, that is very true. I think last time you pointed that out, that it's tough to have friends in your business. Was that correct? Did you say something like that?
Yeah, that was definitely me. Looking back 17 years, it's funny that when you're in the media business, there's a great saying that says, journalists befriend everyone and yet have no friends, So it's that's sort of the case. You know all these people and all these people know you, but you really can't have friends. Because people always say I can't believe you wrote that story about me. You came to my kid's bat mitzvah or, whatever.
Yeah.
So,
well, I think that's wrong. And I think that should be independent. As long as you don't say any bad thing about me or UrbanDigs, I'm cool.
Right, exactly. That's the general attitude usually.
Exactly. Well, listen, lots going on. First off, just high level, man. What do you think about this whole thing that we're dealing with here? Quick high level here, and then I'm going to get to some questions.
I wish I could give you high level. I feel like everybody is in the same place at the same time. Everybody, it's such a new thing for everybody. No one anticipated this. The only thing we are doing as a company is trying to adapt as things go on. And there's no wrong decisions. There are no bad decisions. We're just trying to make the best of it. And, we adapted, all of a sudden our traffic on the site went up by 37% month over month. And then from when this started to today, it's gone up by 53%. Right. So now we're getting over 200,000 people a day that come to the site because we do cover real estate, in a very granular way. And we have the largest team covering real estate. So there's a lot of content that we put out to inform people. And it's funny because even our stories, they flip-flop, because the government flip-flops on what they're trying to do, and then we're covering them, and then we constantly have to go back and change things. And people are so starved for information. And they need direction, they need guidance, and they need leadership. So of course, traffic has gone up for everybody. I think there was a great Brian Stetler piece in the New York Times about how traffic on all news sites have just gone up tremendously. Traffic has gone up, but business has come dramatically down. And it's going to be interesting to see what happens to media after all of this, because a lot of them won't be able to survive it.
Yeah, there's no playbook for this whole thing, right? We're in unprecedented territory here. So
we went home four weeks ago, and it was my editorial staff that said, hey, we should go home. And I didn't want to fight it, but I thought in the beginning, I was one of these guys who was like, come on, this can't be like this. We're going to go home, and when are we going to come back? And I'm so glad that we did. I'm so glad that we went home, because we were able to adapt early on and started to change sort of our content and the approach to the content and how we operate, so 4 weeks ago. And I'm happy to say that we adapted fairly fast, and thank God for technology. It allows you to adapt, at a fast pace. But it still takes adapting, it takes change, and it hasn't been easy for anybody. I'm talking to CEOs of companies, not only in real estate, but outside of real estate, and across the board, everybody's cutting back. They're cutting back staff, they're cutting back marketing, they're cutting back PR. Anything that's not part of their core business, they're cutting back. And I expect that, and we did this thing, and so I imagine it's the same for every business out there, because this is not a 1 month thing. This is not a 2-3 month thing. after we get over the virus, then we have to deal with the economy. And to get that economy started again, it's going to be.
That's a good segue. I mean, how long does this last? You know what I'm saying? I mean, I kind of think that like they're going to do the no showings order, right? That's going to come up on April 30th. But we don't know if that's going to get extended or not. And if they do leave it in place, they might take it up and be like, listen, yeah, we're taking this restriction off, but we strongly advise everyone sit in place for the next month. Or they may just extend it. And then
obviously safety first, nothing's worth your health. But
right.
I get it. People have to get out there and people have to be able to work. People have to move. There's people who are like we talked to we talked to these couples who were in the middle of a divorce and they were living together and they're waiting for the divorce to finalize, and when it did, they were ready to move. They wanted to separate from each other. That was the point of the divorce.
Yeah.
And now they're sort of stuck together. And because not only is the building that one of them is moving into is closed, and their family's far away, and for whatever reason, people have reasons that they need to move and like move to a new apartment or move to a different apartment, and they should be accommodated in some way or another. Of course, keeping everybody's health, in mind. But I feel like there is ways to be able to do that if you could equip people with the right tools to be able to use the buildings in a certain way and to do showings in a certain way. I'm not an expert in that, and I don't want to get hammered on social media because I said people should go back to work. But
yeah,
it can't just be like everybody stay home until we figure this out. But that's what we're doing now, and let's see how it works.
Right. And let me just go back to one of the points you made earlier, which was that, a lot of people are seeing traffic go up, but once this kind of normalizes or kind of comes back down, your business is going to struggle. So I'm curious, not your business, but just in general. So I'm curious sort of, from your position as a CEO, how do you take the growth you see in terms of traffic and make it stick? What are some things like that an agent could do if an agent's out there, publishing stuff, getting content out there, and suddenly they're seeing traffic? How do you actually turn it into sort of?
Well, for us, we've over the last 2 years, we sort of steered away from media, which is like advertising and marketing dollars, and into like paywall subscriptions and things like that, and providing the sort of content that people have to sort of, they find it indisposable and they have to have it as a part of their routine. So we feel like our news is that, and we're layering that with data and reports and things like that, where people have to subscribe to get that information. And thank God we did that 2 years ago, because if that wasn't the case, I don't know where the real deal would be today. And, we did that as sort of a way to supplement our revenues, but now it's turned into like one of our biggest revenue drivers, So, and we do these webinars and we do these special webinars, and the paywall subscriptions for those are through the roof. And that's what we're doing. We're coming up with new products that people need. Like, it has to be stuff that people actually need. And I think to be able to inform people and to make people smarter about the industry and about their market, that's key. And I think for agents, that's the other thing. Like, you have so much time. I'm on the phone now more than ever. I'm like literally going through a call list. I don't want to do emails and I have all this time in my house. So I'm calling everybody, and like, it's strange, but everybody's taking my calls. So it's everybody's.
They have no excuses.
Yeah, everybody is available to take my calls, and it's just good to be in their face and to be like, hey, what's going on? What are you saying? And I think those sort of relationships matter. These conversations that you have now during these times make a difference. These are conversations people don't forget. I mean, during the Great Recession and during September 11th, I distinctly remember the conversations I had with who I had them with. Those chapters are very like stuck in my head, and I think the same here. And I think when we come out of this, I'm going to make those same kind of calls and ask for business. Right now I'm making those calls to sort of establish relationship and make sure that they know that we're here, we're operating. If they have news, they should share it with me. If they see any trends, they should share it with me, and they know that I'm interested and I'm in the business with them. I mean, in a different sort of capacity, but still we're in it together.
Right. Amir, that's such a fantastic point, because, John, we're seeing an increase in traffic also, and we're seeing an increase in calls from agents and emails from agents. Everyone is clinging to insight. Any insights that you can give them, any data or trends or any insights that you can give them on what the narrative is and what the storyline is, and how are we all dealing with this whole situation? Because there's a daisy chain that ripples effect down. It goes to, what if I sign a deal?
Yeah.
What if I sign a deal right now? How do I get that contract executed? Is that contract getting executed in a timely manner, or is it 2 weeks, 3 weeks now? And there's a couple of missing pieces that take a long time. What about closings?
Right.
You know,
I think
virtual.
closings are obviously still happening. I'm not exactly sure what the steps are to it. We are talking to three big, asset finance guys tonight on our webinar with Dustin Stolley, who does like billions, and Simon Ziff and those guys. And they're talking about they're still doing closings. And, those sort of closings, it's not just 6 people at a closing table or 8 people. It's like 30 people at a closing table. So I'm like really curious to know how those closings are happening. And those are some of the stuff we're going to ask them today. But to be honest, I don't know how they're happening, especially when they're saying like, we need real signature. It can't be a copy. Like so many things that normally people wouldn't accept. I feel like in some ways they're accepting them. I mean, my mother sold her apartment in Virginia, and they accepted. They were like, we're going to do the closing anyways. And then when just mail in the actual signature. And so many of this stuff had to be mailed in to come in later, but the closing actually happened.
Right.
I think that's another great point, which is, when you look back, when we finally get out of this, what are the things do you think might stick around? There's a lot of stuff that we're kind of doing as a temporary measure. I'm just curious what you think might stick.
Well, I think fundamentally, like real estate and cities are going to change. I mean, I believe that. I hate to say it because I bought my office space. We bought our office space in Hudson Yards, and now I sort of, owning commercial office space in New York City was always a guaranteed asset, And now I'm looking back at it and I'm thinking to myself, okay, we have 12,000 square feet there. In the 1990s, a lot of businesses shrunk down their amount of office space by moving their customer service and call centers to India and North Carolina and other places, Minneapolis. And now businesses, they got catapulted into this new position without wanting to. It got accelerated where they're like, hold on a second. A lot of my middle management, I don't need in the office either. So much of this stuff, the work that these analysts have to do, it's all digital and it can be measured project-based. I don't need that guy in New York City. Not only do I have to pay him the New York City salary and New York City taxes and insurance, but I also have to pay New York City overhead for him. That one employee, if I could outsource that guy and have him work in Ashford, North Carolina, and have him pay him less salary, he's happier. His kids are going to good public schools. He's near his family. And people who have kids, they don't give a shit if they're in the city. Like, how many Broadway shows are you going to go to? So like, they'd rather be in North Carolina or wherever, upstate or wherever they need to be. All of a sudden, I feel like office space is going to shrink down. So I'm talking to a lot of asset managers, and they're saying they're shorting REITs. They're shorting the REITs because they're thinking people are just not going to need as much office space. I'm not going to need some of my editors and some of my operations people. I don't need them in the office. That's a fact, And we're a small business.
This is the big question is what do we look like when we come out of this? For a lot of companies, you're talking about your company included, there's a lot of companies asking them the same exact questions. What do we do when we come out of this? I mean, you got all this stimulus. They're trying to give that bridge to get over this duration, this moment in time. To not only be able to survive this, but to kind of boost you back up. And it's like a battle. It's a battle of this kind of stuff, and whether or not that fiscal and monetary stimulus is going to play a role.
It's a chain effect. That commercial space, that guy, that middle manager that doesn't come to New York with his 2 kids, all of a sudden doesn't need the 2-bedroom in New York. So what happens to that 2-bedroom?
Right.
I feel like the dynamic of the cities are going to change, where the cities are going to become younger. Right? Like people with families, all of a sudden, if they have a choice, I have people with families in my office, right? They have kids and stuff. They live in New Jersey. They live in Long Island. They're commuting to work. They don't want to do that commute, if it's a lot more comfortable for them to be out there. So what happens to those, to that inventory that was designed for families and people like that? And I think the cities are going to revert to being younger and, to going back, and it's just a chain effect that's going to happen. Like less office space, less need for 3-bedroom and 2-bedroom apartments, and boom, 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 it keeps coming down until it hits retail, and all of a sudden you realize retail is going to change. I feel like there's going to be a lot more room for mall and pop shops because all of a sudden retail landlords are going to realize, holy shit, there's only so many, Tiffany's and Louis Vuittons who can afford these kind of rents. And they're realizing that they don't need 3 shops in New York. They need 1 shop. So they have to fill these retail spaces up with somebody. And I feel like the guy who has a grilled cheese shop can all of a sudden afford to have a retail store and not be expected to pay $20,000. And that's a lot of grilled cheeses. You never think about that. But like to sell, how many falafels can you sell to be able to pay retail in New York City? It's not easy.
And that's a shakeout that we're I don't think we're even in like round one of yet kind of thing, because I mean, this is where like the current environment is similar to the credit crisis, John. You know what I'm saying?
Yeah.
And now we're going to like, all right, who could pay their bills? Who could pay the office space? What banks, what regional banks are exposed? And it kind of has that credit crisis element to it, because it's like trickling down the daisy chain to all these, you know, ultimately it goes to the banks.
You know, this stimulus is, it's a lot of money. It's $2 trillion. It's a lot of money, but it's only a Band-Aid for about 3 months, you know,
Right.
then what? Then we got to come out of the virus situation, hopefully, but then we have to deal with the economy. Like it's only a simple Band-Aid.
It's going, the fiscal was 2 trillion. I think the monetary was already 5 to 6 trillion, because they levered up 400 billion from the 2 trillion on the fiscal to get 4 trillion to go by. I think we're already in total around 6-7 trillion.
Yeah.
And I think there's more trillions coming. And at some point, trillion's going to mean something.
It's going to mean inflation.
I don't know when. Yeah. John, you look like you had something you wanted to say there. Is there a
No,
question?
I just, I like Amir's point about the whole trickle down and the whole reshaping almost of New York City from a landlord tenant perspective. And I think that's great. I think, one of the things about New York City is it's constantly reinventing itself. No matter what gets thrown at it, it gets knocked down, but somehow or another it kind of comes back up, and who knows what that's going to look like. But I'm curious, in terms of like the physical infrastructure of the city, Amir, do you see any lasting changes from this crazy virus thing? Do you think that might hit on the physical side, whether it's transit or, the congestion tax or just taxes in general, you think?
Well, somebody's going to have to pay for this money that they're printing now, and it's going to be us ultimately. But I feel like in terms of how the changes that are going to happen, that we're going to end up being comfortable with, the same way after September 11th, we were comfortable with taking off our shoes and our clothes to get on a plane. We're going to be a lot more comfortable with sort of our liberties being, a job, applicant having to show that he's been tested for certain things, and a lot of things that were sort of faux pas and you get sued for. I feel like a lot of those things are going to be okay, because nobody wants to outbreak like this again. Nobody can afford to have one. And they're like, put your sensitivities aside, put your liberties aside. We need to protect the entire globe here.
Yeah.
And I don't think anybody's going to say anything.
Yeah. Hey, I'm just curious for buyers that are out there that they're trying to figure out whether or not they should pull the trigger, and they know they should price something in. Do you think that there is a inflationary wave that will ultimately come through here in the years to come with with all the stimulus that's being thrown at this, or do you kind of see us just flattening out and being dead for a while?
Well, it's definitely, I think the price of everything is going to come down. And I think anybody who thinks differently, I was interviewing 3 developers in Miami, and, developers by nature have to be optimists. They don't have a choice, because they're like single message, like, no, things are going to be fine. Things are going to be fine. Put money with it. But like, if you look at all the things that are happening and to think that prices are going to remain the same, it's just not possible. I'm talking to all these mezz lenders, and of course, nobody's going to foreclose on anybody right now, but they're going to foreclose as soon as it's like, oh my God, this guy is such a terrible person for foreclosing on me, or this bank is so horrible because as soon as that sort of thinking is put aside, which will be in 2 months, then you're going to see a lot of foreclosures happen. And when those foreclosures happen, the only way they make sense to the people who are going to hold the note is to lower the price, because they want to get it off their books. And then even if you can afford to keep your development, above water, how are you going to compete with the guy who just foreclosed on somebody and he's going to offer this, same neighborhood, same quality of a building for a lot less? I don't care who the architect is, and I don't care who the developer is. And then it's going to be a chain effect, and all of a sudden the guy's like, oh my God, I got to compete with the guy next door, so I got to lower my prices. And then boom, 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 boom. Commercial space for sure. That's going to definitely happen with commercial space. It's going to happen with residential, and with retail. We've already been watching that sort of shrink.
Yeah. And this is one of those things you can kind of like predict the future, because like you see it now, you see it in real time now, and then the prints are going to be made public in the months to come. So I could accurately say that in July, August, and September, the pricing trends for residential real estate are going to go down, 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 down.
You're seeing that. I mean, you guys have great numbers. You always have like really like good data and stuff like that. So, I mean, if you're saying that, then you already know.
I see volume.
Yeah.
I see volume, and I see listing volume. I see stuff like that. I do not see where the deals are happening.
Yeah.
So that's what's killing me. and I'm trying to get this information from as many brokers as possible, but they're really, these brokers want to give accurate information out, and they're finding it hard to give, because it's all over the map.
Yeah.
5% here, 25% there. I'm hearing of deals up to 30% off right now, 35% off in some cases, that are in contract right now because they hit the bid 3 weeks ago.
Right.
That are yet to funnel through the system.
That's a significant drop. It's huge. So, and what is that going to mean to the outer boroughs, like to those fringe areas that were developing in the last?
Just going to say that.
So all of a sudden you're like, well, I have the money. So for $1.5 million, I could either be in Williamsburg, I could be in Soho. Like, where am I going to be? I'm going to be in Soho, right?
You know what? And forget, this is so unprecedented and crazy. And there's so much stimulus at the tail end between the destructive deflationary forces that you've outlined here in the last 10 minutes. And the stimulative effects of all the crazy stimulus coming in here. Who the hell? I wouldn't be surprised to see everything just bounce right back. I really wouldn't.
Amazing. I also think different cities are going to have they're going to be impacted differently. Pretty much everybody I talk to who has any sort of means says that they want to move down to Miami after this. They're like, oh my God, I should be down in Miami. At least I could be in a pool right now and isolate in the house, whatever, or LA or somewhere different than New York. So I do feel like some areas are going to benefit from it, but people have a very short memory. They forget just 2 years ago, Miami was underwater for a week. Yeah. So everybody has their own problems, but but right now, do I want to be in a dense city like New York City, or do I want to be in sunny Miami? And of course, Miami seems more attractive. So the developers that we talk to in Miami, they feel very hopeful about that. But again, still, the prices are not going to be the same. And anybody who thinks that they're going to keep the same prices, they're just delusional.
No, I agree with that.
No, and again, we're going to have 6 months. And I think the next quarter report, I don't even think it's going to show it, Amir. I think we're going to show the next quarter's report, and it's really going to show deals that were signed in January, February, and maybe the beginning of March.
Man, I wonder how many of those are actually going to close. How many people are going to try to jump out?
It's a great question.
There's this Ilsa, I forget what it is, but it's this old rule that if new capital comes into a new development, the original investors or the people who put a down payment are allowed to they have the option of pulling their money out or what, because they're putting their money into an enterprise that they know all the investors. Any new investors that comes into the core of that development, the original people can pull their money out. And right now, a lot of that is happening because people they need capital to be able to, keep these developments sort of afloat until they can start selling and marketing and stuff. So for those people who are on contract for a lot of those units, a lot of them are going to be like, well, this is my opportunity to get out of this because, 7-8 months ago, this Zaha Hadid project made sense to me, but now I don't give a shit about a Zaha Hadid project.
Yeah. And it's
$1 million.
And it's too soon. I mean, everyone's asking to give us information on that. It's too soon to track it because it's like it hasn't played out yet.
I don't think anybody has it. I love to see what you guys have. Whatever you guys have to report.
We checked some broken contracts and stuff like that, and it's not nearly the number that you would think it is. It's low.
For commercial stuff, we started going through since January 1st. We started going through all the deals that sort of fell apart since January 1st. There was a peak. All of a sudden, there was a massive peak. Other than your core guys, your SL Greens who have to put the money back out there, and now they can't. It's too tight for them to renegotiate and stuff. Other than for those guys, there was a huge peak in end of February and through March of deals that commercial assets, people were backing out of. And today we have a talk at 5 p.m. You guys should tune into that. If we're gonna ask about that. We're gonna ask about all the deals that are sort of falling apart now because everybody wants to be liquid. Nobody wants to have their asset their liquid held up in some asset that they don't know what it's actually going to be worth after this. Right. What if you buy today, you have no idea what it's going to be worth 2 months from now or 3 months from now?
That's the thing. See, I mean, that's the thing. You can't. If you're buying today, you got to have the thick skin. If you're buying today, you got to have the thick skin to not care about where it's going to be in 2 or 3 months from now, because you're going to be in a dislocated window. Personally, I think if you signed a contract 3 weeks ago, Amir, in mid-March at the depths of hell, right? 3 weeks ago, I think you got maybe a 30, 40, who knows, 30, 35%. I don't know if you can get that 40% off right this very moment in time.
No, maybe people aren't desperate enough yet. People aren't desperate enough yet. They know it's getting there, but
Yeah.
honestly, I mean, I'll ask you, if you had $1 million right now to invest, like, how would you invest that? Would you invest it now, or would you wait 6 months from now?
Are you talking about in real estate right now?
Yeah.
If I honestly, I would invest it now because I'm closer to that period of fear. I think I think they're putting a put under this. I'm not saying that we're going to have another round of volatility. I'm not saying that we're going to have a daisy chain of bad news and bank failures and it's going to go all the way up to CMBS and commercial and all that stuff in retail. And that's going to be all bad. I'm not saying all that. But these markets tend to be dislocated in very short windows. And I think right now we're dislocated, but we're not as dislocated as we were 3 weeks ago. So like we're going to be in this thinly traded, dislocated market for 4 or 5 months.
So
right?
you think the opportunity is now then? So you believe the opportunity is now?
Well, yeah. I mean, I think the opportunity was 2, 3 weeks ago, quite frankly. And I think now there's opportunity, just not as much opportunity because how many sellers are hitting that bid? Amir, like that's the thing. Like right now, the only sellers that are hitting that bid are the ones that are forced to liquidate and have to hit the bid. They want out for whatever reason. A lot of sellers.
But 3 weeks ago was great. Then today, I mean, today is even better, no? Or you think 3 weeks ago is better than today to purchase? Actually,
I think the markets have rallied about 25% over the last 3 weeks, over the last couple of weeks since those lows. But more information has also come to light in terms of the flattening of the curve and the number, because there's a viral component and then there's a duration component. Just like you mentioned, there's all these different crazy components coming in here.
Yeah.
But 3 weeks ago, if you put yourself back into time and place when the S&P was at 2,200, whatever it was intraday, and the Dow was at 18,000 intraday, around there. Right when everything was rising, all the viral numbers were rising, the level of fear at that acute point in the dislocation was higher than it is today. And the chances of a seller hitting a gap down bid, where the bid is now 25, 30% lower than fair market or whatever it is, because it's so illiquid, was much higher than the chance of someone today out of fear hitting that bid. That's all I'm saying. So
well, I hope you're right. I hope you're right about that. Maybe I am buying into the fear a lot more. I just, my sense tells me like, okay, we're going to get through this virus thing in a month or two, but like all the jobs that were lost, like all the companies that are going to be shut down, all the effects that this is going to have, it's just going to pile up, and we're going to have a whole nother wave of things to deal with. And that means a lot of people are going to want to remain liquid. And that means that a lot of people are not going to be buying stuff. And that means that prices are going to come down on things. So that's why my thinking is that if I had $1 million, I want to wait to see what's going to happen. I'm like absolutely not in a rush to go and get rid of my liquid, not knowing where my job situation is going to be, not knowing where the market's going to be. But then there's like, there's people like you who see opportunity in chaos, which is great, because I feel like people who can bet accurately in those markets, they make a killing,
Well, it has to fit your needs. Like, I mean, again, I bought after September 11th. I bought in October of 2001, and I didn't buy it because I thought it was an amazing time and there's going to be a huge, buy the dip and sell high. I didn't buy it as a trade. I bought it because I was looking for Manhattan real estate for a while. I found a great place. It just so happened that the price was amazing, and it actually went to a bidding war. But for 4 months after that, it was extremely fearful, and I couldn't even close. And it's crazy. The same thing's happening after 9/11, after the credit crisis. Banks are starting to contract. And JP Morgan just came out now saying you have to have a 700 credit score to get a loan. And I mean, they're starting to tighten the standards and everything. So like this is all now happening. And for the record, the sales are lagging. So if I sign a deal today or 3 weeks ago, we're going to find out about it in 3-4 months. So in the sense of the decline is ahead of us. 100%. Like 100. The next 4 to 6 months will ultimately show price discovery of what's being signed today. Will ultimately close in July, August, September, probably August and September. And those are the months that are going to show just how bad we got hit now. They may be down 20, 30%. We don't know. I think it's going to be looked upon as a asterisk next to it, like a period of time that it's either going to have like a V or a U, probably more like a U. I think we're going to be down here for a little while. I just think that acute fearful phase 3 weeks ago, that window has closed, even though we're still in that dislocation market.
I feel like that's, I mean, I hope that's, I see what you're saying with that. I just feel like there's still so much unknown out there that it's not exactly fear, but it's just like uncertainty. And that's also, affects the markets.
Right.
All right.
Amir, could I just shift it 1 second? So you mentioned something earlier, but you guys have these calls, which are just fantastic. I was hoping you could just put in a plug for the Real Deals calls that are.
Oh, sure. Thank you. Yeah.
Yeah.
We have these TRD talks live that we started doing since the whole pandemic happened, and to talk to people like really the leaders in each sector and finding out how they're coping and how they're dealing with things. So it's every Monday, Wednesday, and Friday at 5 p.m. We have, we talk to different people, and they've been very informative. They've been very good so far, and yeah, we're going to continue to do them. It's a new channel for us that we're going to keep doing after this.
Awesome. Great content, great insights. Amir Korangy, thank you so much.
Thank you, Noah. Thank you, John.
Thanks,
Founder
Amir.
and publisher of The Real Deal. It's been awesome. This is Noah and John. We're from UrbanDigs. We're talking Manhattan. Stay safe. Let's catch you next time. Thank you, Amir.
Thank you, guys. Bye.
Bye-bye.